Good morning, everybody. It's Wednesday, October 4th, 5:30 a.m. Central Time. Grains are trading mostly lower here this morning. Joe's out of the office until Monday, so this morning I have Matt Bennett on with me. We're going to start off with the USDA reporting some flash sales yesterday. U.S. exporters sold 220,000 metric tons of SRW wheat to China for delivery during the current marketing year, and exporters also sold 265,000 metric tons of soybeans to China for delivery during the current marketing year. When it comes to wheat exports, is this a sign of things to come, Matt?
Yeah, we have to hope. I mean, this isn't something that you see, every day. I was kind of surprised to see these, quite frankly. But bottom line for me is that China's buying stuff off of us to begin with. But wheat, that's an interesting one and definitely a good thing. As far as soybeans are concerned, I've just got to hope we figure out a way to move soybeans in an efficient manner. I mean, I'm kind of concerned, of course, about this river situation. I hope that we get it figured out soon and Mother Nature turns herself around. But this was definitely a good sign. And I think, I guess my thought all along is that China was going to step in and buy some U.S. corn, maybe even more U.S. beans. But it's just one of those things where you don't know for sure exactly where their head's at. So today or yesterday was, in my opinion, a great sign of things to come, hopefully.
Definitely. So, according to David Roche, president of Independent Strategy and a veteran investor, grain prices are going to soar in the coming years. Roche believes wheat prices will increase 13 to 15% in the next 2 years. Russian volatility and El Nino weather pattern and climate warming will disrupt grain supplies, causing prices to increase. The prediction comes at a time when wheat prices are at their lowest levels since September of 2020. Soybean prices just hit a 4-year low, and corn prices are trading around 3-year lows. What are your thoughts on this prediction, Matt? Do you agree with it?
Well, I mean, after seeing the wheat market plummet the way that it has, saying that we're going to rally back 10 to 15%, I don't guess that that's a stretch. I mean, grain prices soaring. Whenever I hear a term like that, it gives me pause. I guess I get a little frustrated, and why I get frustrated is because I think a lot of producers have kind of come around to the idea that we've taken these prices down to levels that obviously are nothing like they were for a couple of years, and figuring out, hey, we've got to have to work at this marketing plan just a little bit, get a little more creative, make our bins pay and whatnot. As soon as you hear someone say that grain markets are going to soar, I think people just completely quit selling. They quit thinking about marketing plans and happy days are here again type thing. So I'm very cautious as to assume or to side with this guy. I don't know much about him, but
Mm-hmm.
I would say that a bounce back on wheat is certainly possible. I would be interested to read more of the article personally. Whenever I look at corn and beans, I kind of know where I feel like those prices are, and I think looking at South American production, looking at world production, that has really increased over the last couple of years for good reason because we've had high commodity prices. I'm a little bit hesitant to think to side along with what he's saying.
So we had a job openings report released yesterday, and openings increased 690,000 to 9.61 million in August compared to the previous month. The surge in openings was the most in over 2 years, given the rise in openings. Interest rates may stay higher for longer. The tight labor market may also cause the Fed to pursue another rate hike before the end of the year. The labor market, however, continues to become more balanced with only 1.5 jobs available for every unemployed person. Back in 2022, there were 2 jobs available for every unemployed person. So there's been talk of the Fed implementing another hike before the end of the year. Do you think this will push them even closer to implementing a hike?
I think that people were talking about maybe a reduction here not so long ago. That's pretty much out the window, I guess. First of all, as far as another hike, yeah, I would say that another quarter hike is probably something that they might do, especially with something like this. It's a little bit, it's a little daunting. I think that you're looking at, in my opinion, inflation is still definitely not on its deathbed by any means. It's still around, and as you throw more interest rate hikes at this thing, I'm getting a little. I would get a little more concerned the more that we talk about more rate hikes to come, about the economy, about any individual with a fair amount of debt, because I am concerned that we're not going to see any rate reductions for quite some time, and probably going to see more rate hikes.
Right. So you talk about worries over the economy. The spike in job openings caused the stock market to absolutely tumble on Tuesday. The S&P 500 closed at its lowest level since June 1st. The Dow Jones and the Nasdaq ended the day at their lowest levels since May. Investors worry the Fed will keep rates higher for longer if the labor market remains tight, which that's probably what will happen. Traders are now pricing in a 29% chance that policymakers will hike rates at their November meeting. Just a week ago, traders were pricing in a 16% chance of a rate hike. So on the podcast before, we've talked about how the economy, how we've most likely avoided a recession. Do you feel a recession is creeping back into the picture as things with the economy kind of look a little bit more dire?
I think it's at least in the discussion. I mean, the thing that concerns me when you look at people pulling money off the table, and that's what this S&P plummet is. People's pulling their money off the table. We saw the same type of thing with commodities last, and really everything last Friday. Whenever you're talking about this shutdown situation, and so we avoided it for 6 weeks, or we avoided it for a time being. But you look at people and they get a little bit wary. Do I want to have my money out there susceptible? And I think there's this thought out there, I guess, in my opinion, that we're one catastrophe away from all hell just breaking loose. And I
Mm-hmm.
kind of feel like that's what this S&P situation is. I don't know that I've ever talked to as many people for quite some time, if ever, that are pulling their money to safe haven, so to speak. And I think it's because of stuff like this. Because yes, I mean, if you're going to look at high rates for quite some time, anybody in farm country that's got any age to them will tell you that was like the scariest time of their life. My dad, for instance, and a lot of those guys that lived through the 80s. Fortunately, a lot of them, most of them were able to get through it, but going through 16 and 18% interest rates was obviously a devastating situation. A lot of folks lost their farms over it. I'm not saying we're going to those types of interest rates, but Mackenzie, we're borrowing so much freaking money to put a crop out nowadays, as a general rule, that 9%, 10%, if we get to that type of borrowing to put a crop out, is going to wreak havoc on the U.S. ag sector. So, yes, I'm concerned about the economy as a whole. I'm concerned about watching investors pull their money off the table. And I'm also concerned about the farm economy if we continue down this path.
Yeah, it is a worrisome deal. So, a new deal may speed up Ukrainian exports. Under a new agreement, Ukraine will shift some border checks with Poland to Lithuania. Veterinary and sanitary checks of Ukrainian agricultural exports destined for global shipping will now take place in Lithuania rather than at the Polish border in order to speed things up at the Polish border. Ukraine is still trying to secure a deal with Poland over import restrictions. Warsaw recently banned Ukrainian food imports to protect its own farmers from an oversupply of goods. So, do you think this move will have any kind of impact on the global market? Obviously, it might help Ukraine get their exports to the market faster. But what are your thoughts?
Yeah, I mean, I think for one thing, it's just going to make people feel better about the flow of products and grain, if you will, out of Ukraine. Maybe it won't be as disrupted, and maybe it won't be as impacted by situations like we've had over the last couple of years. And so my thought all along has been, yes, it's provided excitement and fireworks in the markets whenever we've had issues with Ukraine and Russia, whenever we've had I guess fears again of like the flow of grain. But the thing is that we always knew the grain was there, and so ultimately, to me, it was kind of a flash in the pan type situation. This is probably going to mitigate that flash in the pan, if you will, or the level of excitement that you might see, if you're having issues in the Black Sea region. If you've got a way to be able to get products to market that aren't going to completely be disrupted, then in my opinion, it's going to basically mitigate the craziness that we see anytime we see flare up.
So we had another bloodbath of a day for cattle futures on Tuesday, which was, of course, fueled by pessimistic outside markets and worries over persistent inflation. Feeders closed an average of $5.12 lower. Live cattle closed an average of $2.42 lower. The past week and a half has been pretty rough for the cattle markets. Is this just a correction, or have we hit a plateau, in your opinion?
Well, I took feeders, on Tuesday, and so that's why they were down $5, I'm pretty sure. But no, I mean, Mackenzie, I think the last time I was on, we talked a little, and I basically said I'm not as bullish as what I've been in a long time. And I mean, the reason I think is it's twofold. First of all, you watched April just try and try and try to get to $200 and above.
Mm-hmm.
There's a lot of, in my opinion, spec and hedge pressure at that level. Just like, hey, you know what? I'm willing to take a short position here. What's the upside at $200 type situation? Then the other thing, of course, is what we just talked about. When the Dow plummets, if you watch, when the Dow plummets, cattle just don't do much of anything but go lower. I mean, what it is essentially is consumer sentiment. So, if I tell the average consumer, hey, you know what, you're going to have higher rates for quite some time, you better tighten your budget. And then, you talk to your wife or your husband and say, hey, you want to go out for steak on Friday nights? Like, man, I don't know. We just talked
Mm-hmm.
about our budget, and so maybe we're going to stay in. Maybe you cook steak at home and save a little bit of money. Hopefully, I mean, that's one thing that I think we learned with the pandemic is that people that really love cooking steak can do it at home cheaper, but they can still enjoy it. But yes, in my opinion, whenever you look at the Dow and you look at equities and people pulling their money off the table, it's not bullish cattle by any means. Now, I'm not sitting here saying that cattle are going to completely fall apart because you don't fix the cattle situation overnight,
Right.
but we were overbought. Let's face it. We've got to be realistic about this thing. And we've enjoyed extremely good prices. My number one fear, it's been my fear for the last few weeks, is the person buying feeders. Let's just be real about it. You're taking serious risk if you're not doing something in the way of risk management. And so buying feeders at $300 and three and a quarter, and some of the prices that we've heard people pay, you got to be very cautious in here, because there's no guarantees that we won't see continued market action like this, at least until we get this economy somewhat straightened out.
Right. The feeder market has just been off the charts. And as you just mentioned, demand is definitely a concern as the economy continues to struggle.
Absolutely.
That is all we have for you guys this morning. Have a great day, and we will talk to you tomorrow.